So Chinese stocks were not doing well for like a really long time, and now they seem to finally be waking up. So what's the story? What has China done to awaken their stock market? So it seems like China wasn't done recovering from the pandemic period. They eventually relaxed their lockdown measures and implemented stimulus policies, and they've injected money into the economy through infrastructure projects and supported small and medium-sized businesses. In fact, the Purchasing Managers Index, PMI, which measures the activity in the manufacturing and service sectors, has shown signs of improvement. And this is a key indicator of economic health and investor sentiment. A huge factor contributing to the rise in Chinese stocks is the support from the Chinese government and the People's Bank of China, which is their central bank. The central bank has recently cut interest rates to boost the economy, which reduces, of course, borrowing costs for companies, encouraging them to invest more, and that basically helps boost their stock prices. And they've also started to ease up after like a period of regulatory crackdowns which affected companies like Alibaba and Tencent. The government seems to become more like supportive and less strict on them now, which has increased confidence from local and foreign investors. When those regulatory crackdowns were happening, it was looking a bit like scary for people, like especially who are outside China. Like it just wasn't looking good, and this could even be like a facade or whatever, but in general it will obviously like improve investor sentiment. So the key sectors driving this rally are tech stocks like Alibaba, Tencent and JD, which were suffering from the crackdowns and the fines. And the other sector that's performing well is the EV sector. So NIO, XPeng sales have improved, and China, like trying to focus more on green energy, is supporting the EV companies a lot. The government support includes like subsidies and infrastructure investment, and their renewable energy sector is also benefiting, such as like solar and wind. And then another reason why the stocks are rising a little bit, the reduction in geopolitical tensions between the US and China. The US has started to ease some of the restrictions it placed on China, and China opening up their foreign investment again. And another important thing to note is that Chinese stocks were heavily undervalued after like years of underperformance. So after the tech crackdowns like the Alibaba and Tencent stuff, and then the real estate crisis, which that company went bankrupt and everything, this just like drove everything down so much that people who are looking for an opportunity can see that there's something that's become undervalued. There's money to be made here. And a lot of the Chinese companies had lower PE ratios to their like American counterparts. So that collapse of Evergrande, the real estate company, made a lot of lack of confidence in China's economy, and it looked like there's going to be like a financial economic crisis or something. But the government has tried to stabilize the situation by like injecting liquidity into the real estate sector, making sure that the large real estate developers, etc., don't collapse completely. While the real estate sector can still be fragile, it's still like in a much better situation than it was before, and there's a lot more confidence in it than there was. And then there's foreign investment. So China has programs like what's called Stock Connect program with Hong Kong, which allows foreign investors to easily buy Chinese stocks. So you see a lot of capital coming in from international investors who see opportunities in China, and more foreign investment coming into the Chinese stock market increases the liquidity and everything. So even though things are looking better than before, there's still risks and challenges in China. So there are still concerns about the real estate market because there are still many developers facing debt problems, and while the government regulations have eased, they could just introduce more regulations again later on. And geopolitical tensions, like even if they look like a bit better now, they can always come up and they could get worse or better, or anything can happen, especially right now. It's like such uncertain times. So that's all. I mean, I personally am not very heavily invested in Chinese stocks. I don't have any Alibaba or anything like that. I do have NEO, which I've been kind of bag holding now for ages, so I really do hope that that wakes up. My average is like, I think maybe like around $40 or something like that. There was a time when I was doubled on NEO and I didn't sell, and since then I'm just down. And I know a lot of people actually who are stuck in NEO with high averages and just bag holding. So I feel like it might take quite a bit of time, but I really do hope we get there. And yeah, I mean, I know some people who did pretty well buying the yin ticker, which is like the ×3 leverage of like their top 100 companies or something like that. I like really didn't think that was gonna work, and it seems to have worked. Good for them. Happy for them. That's all for this video. Please make sure you like and subscribe and comment your thoughts, and I hope to see you in the next video. Bye bye.